Hey guys, OPSEC here, and today we're going to be talking about the logic of the markets, how the markets move, who runs the markets, all the different groups that participate in the markets, and more. So, if you want to be able to understand what we're going to teach here, you have to watch the first episode of the series. It's very important. This is the second episode. Make sure you understand what are longs, what are shorts, and you watch the entire video because it goes in depth into the fundamental logic of how the market is supposed to function or how it functions. Um, okay, so let's get into it. So, the first thing you must understand is not everybody wins in the markets. Okay, for every winner, there's a loser. For every dollar made, there's a dollar lost. It's a zero sum game. There's money is not created here, it's taken. Okay, so when you put in your $5, then and you lose them, then somebody else gained $5. Okay, so don't think that this is gonna be easy because it's not gonna be easy. You're competing, it's gonna be battle. Okay, so let's talk about how the markets move. So, right, so there's a buyer for every seller, and wherever price is, there must be equal buyers as there are sellers. What do I mean by that? Equal buyers as there are sellers. What if some places are more bearish than others, right? Like, how can there always be equal buyers and sellers? Well, that is just how price is booked, right? If I offer to sell an apple for $10 and you agree to buy it, then I am the seller, I am the one seller, and you're the one buyer participating at the price of $10. So the market offers this price, and then buyers and sellers participate. Well, let's just say here, buyers offered this price and sellers participated, and then it just kept going down. Let me give you an example. So let's just say we have a chart. Let's just draw a quick chart, right? Let's just say over here there's 100 buyers for 100 contracts being bought for 100 contracts being sold. Okay. Now, if I were to market buy one contract, price is going to move up to the closest seller. So if now there's 100 buyers for 100 sellers, and then I buy one, if let's just say the nearest seller for one contract is up here, then price is just going to go all the way up here. But the same, it can also be like there may be a seller right over here, and then price will just move up to here. Or there may be a seller at the current price that has a limit there, and then I'll just fill in, right? And then same if I sell. If I sell near the nearest buyer is here, then price is going to move over here. Okay, that's how price is booked. Okay, so whenever price moves somewhere, it's because somebody wanted to sell there, and so if price moves up, somebody wanted to sell there, and somebody bought from that seller. That's how price moves up. Okay, so now let's get into the different groups that trade the markets, because you have to understand this. You have to understand who is your competition, right? So the different groups that trade the markets, there are larger funds like institutions, banks, algorithms, and institutions could be like, let's just say, it could be hedge funds, it could be let's just say Coca-Cola. They may be trading the prices of like salt and sugar, maybe because they have insider information on the market, etc. And then banks could be trading the currencies, and then there could be just some large companies like Goldman Sachs who have their algorithms that make money off the markets and so forth. Okay, so let's do it again. So there's larger funds like institutions, banks, and algorithms. These are majorly profitable. Okay, then there are the smaller funds, which are individual investors / retail traders. Okay, the retail traders are the smaller funds. So I'm just gonna call that retail traders. Okay, now if we were to split this to profitable and unprofitable, right? Let's just make another group, right? Let's just do this. Who would we put in the profitable? Well, obviously institutions are most likely going to be profitable, right? Why? I mean, they seem professional. They have the means to be profitable. They have money. They can just pay people who know what they're doing They have info and all that, so they are definitely going to be in the profitable section. Banks are definitely going to be profitable, no doubt about it. The banks are definitely making money off these markets. Algorithms, well, I mean, if the algorithm wasn't profitable, I'd just shut it off. So the algorithms are definitely profitable. Where is all this money being taken from? Somebody has to be giving these guys their money. Like, who is giving them? Who's allowing them to be profitable? Well, that's got to be the unprofitable retail traders, okay? So retail traders are the ones that are unprofitable, okay? So in these markets, always keep this logic in mind. This is always going to play out. Profitable, unprofitable. What do I mean by that? There's always one buyer for every seller, right? Whatever place price is. But sometimes price looks more bearish than it does bullish, right? Sometimes you got, like, if you think with retail logic, here's an example of a way retail thinks. They think bearish structure like this is bearish. Well, in cases like this, where it looks like more people want to sell than they want to buy, there still has to be an equal amount of buyers and equal amount of sellers. Now, you may start thinking like this. Perhaps, just maybe, the banks are buying, the banks, institutions, and algorithms, I call that the smart money. Perhaps they're buying from the dumb money, which is retail. What do I mean? If you've been following me for a while, you would know that I called the $0 bottom over here. Today I'm going to reveal to you how I called this bottom, okay? The way I called this bottom was simple as that. There were absolutely no reasons to buy over here, and that's why I said it's going to be the bottom. If you look at it if you understand how retail traders think, which I'll break down right now, then you would understand that there's absolutely no reason to buy over here. That means if price mitigates the premium, who the heck is buying over here? Like, right, there's a buyer for every seller. Who the heck is buying over here? Because everyone wants to sell here. How does it make sense for price to be here? If everyone wants to sell here, price shouldn't move here. It should be at places where there are equal buyers as there are sellers, not at places where everybody fucking wants to sell. Well, if you understand that, then you understand that perhaps the banks, algorithms, and institutions are buying over here. And why are they doing so? They're doing so to make retail unprofitable. Now, let me show you the way retail traders think. So, the number one way retail traders think is structure. Right? They know bullish structure, right? This is bullish structure. When we are breaking the highs and respecting the lows, that's bullish structure, right? And they'll buy each one of these dips. That's why you hear the saying, buy the dip, buy the dip. Then there's also bearish structure. Now, the bearish structure should respect the highs and break the lows, right? And they will short the pump. Every time we pump, they short. Every time we pump, they short. Every time we pump, they short, okay? That's how they look to trade. So, also, something they implement with this is premium discount. So in the optimal trade entry. So for bullish, they will take their flip from this low to this high, and they will look to buy below the equilibrium and preferably at the 0.62 or anywhere between the 0.62 and 0.79, because that's called the optimal trade entry, okay? And then next up, they would look to buy again over here. They buy over here. They set their stop loss down here, and they buy over here. And then again, they buy over here at the discount in the optimal trade entry preferably. And then same with shorts. They want to short over here. Short over here. Short over there. Right? Because they're not just gonna short right over here. They think we're gonna break this low, but it's not so rewarding to take a short over here. You might as well just wait for a small pump and then get in at a higher price. Right? So this is how retail is trying to think. This is structure and premium discount. Now, the next way they think, the second most common way they think is support and resistance. When they see an area that gets respected by price a lot, then they will think that area will get respected next time we touch it, right? Now they will have seen a support level formulate very clearly, and they will Now they'll look to buy over here. What tends to happen is price will up through, but they will look to buy over here. That's what you need to know. And if we get under it, then they will look to sell over here. Okay. Then another thing is when they see structure, when they see bullish structure, the reason they expect the lows to get respected is because if one of the lows got broken, that is the start of a bearish trend. Because now they expect price to continue to respect the structure. And then if the high gets broken like this, then they expect price to continue upwards. So what does that mean? That is the reason that they put their stop loss right over here. Why? Because that is their invalidation. This very point. Okay? So that very point is their invalidation. Now, let's get into how and where we can apply this logic. Now, I made it look like it's simple just now, but this is actually things you have to practice a lot to understand, okay? So first thing, I'm going to address some common mistakes. People think that this is called structure. This by all means is not structure. This is not bearish structure in any form. Why? Because this small move up has nothing to do with this move down, okay? This move down is part of something bigger. It is part of this move up to this move down to this move up. It's part of this order flow. This is just not related. It has no meaning, okay? Just look at it like this, okay? Take it at that value. Now this, on the other hand, this does have meaning, okay? So this, because of the size, everything has to be put into proportions, okay? So this is fine. This is good structure. This is good structure. This is fucking, it's not relevant, okay? So anyways, let's take a look at every single time price moved somewhere and understand how retail got fucked, right? Because you have, by the logic, right? This logic has to apply everywhere, right? Institutions, banks, algorithms, profitable, unprofitable, retail traders, okay? So where have they been unprofitable in this move, right? Because I mean, their structure definitely played out over here, right? Like their structure definitely played out over here, right? Definitely played out. Also, it mitigated the premium. So how was retail unprofitable here? Well, retail might have thought that this was a top because they saw a double top pattern forming, which is also seen as a resistance. And then when we broke above it, perhaps more retailers were bullish than bearish. And then we pretty much stopped out retail traders by going above these highs. And then tricked retail into being bullish here when they shouldn't have been. And then price went down. Okay. Next up, over here, bear structure played out again. How come retail was unprofitable here? Well, let me show you. So right over here, there is a support level from 2017. There's a support level over here from 2017. Okay, there you go. You see that over here, 2017? There is a support level right over there that extends all the way up to here. Okay, so this is the first point retail is looking to buy at. Next is they see this bullish structure break. Support level plus structure break, they're definitely going to be buying this with large sums of money. And then price rips through, and then retail is unprofitable. Even though some might have sold over here at this bearish structure, some might have sold over here. I'm not even sure if it came up to the premium, did it? Okay, it just tapped it. Even though some might have sold at the premium over here, retail the majority of retail was definitely unprofitable over here. Okay. Anyways, let's move on to the next. Over here, right over here, let me just see. Pause the video if you can and check to see if you can understand which structure I'm looking at. Okay, I'm looking at this particular thing. Let's see if you can understand which structure it's related to. Okay, so pause now. Okay, so if you thought this structure, then you were wrong. If you thought this structure, then you were correct. Okay. This is the structure we should be looking at for retail. Okay. Um. Anyways, this structure played out, right? How come? Well, you gotta look. You look over here and you see we have engineered a level of resistance right over here, and then we busted this level of resistance, tricking retail into buying, stopping them out from their shorts because they set their stop losses at these highs, support and resistance levels, and we stopped them out over here, and then price moved down. Okay, so that is how retail was unprofitable here. Next up, we have a bearish break under here. So retail thought we were going to continue down, and then boom, move up. So now this move up, not only does it make retail traders unprofitable again, it stops them out from their short positions. Now it also induces them to do what? To buy. This is bullish structure. They want to buy here and they expect price to continue up. Well, they were wrong again, and retail is unprofitable yet again. So we can always see an excuse for why retail might be unprofitable in all of these moves, right? We can always see an excuse. Now, this brings me back to what we were at the start of the video, what we were talking about at the start of the video. How did I call this bottom over here on Eurodollar? How did I know that this specific point was going to be the bottom? Well, if we were to take a look at the structure over here, right, we would be looking at this, right? So if all of retail is looking at this structure, what does that mean? They are all placing bids above the equilibrium at the premium. They are all placing sell bids, and none of them, absolutely zero, are buying. Okay, none of them are buying. Okay, trust me. Support and resistance, they want to sell based off support and resistance. Market structure, they want to sell. Order blocks, they want to sell. Whatever concept you bring into here, they all want to sell over here. Okay, none of them are fucking buying here. Now, what reason does this have? Why did I think price was going to go up? Because if nobody wants to fucking buy here and price moves up to this area where nobody wants to buy, I have no option but to think that the people who are buying here are the banks, algorithms, and institutions, right? And if they're buying here, considering they have insanely large sums of money, right, endless amounts of money, and they always beat retail and they're the profitable ones, then I'm also going to participate in it. I'm also going to fucking buy here, okay? I'm also going to buy here. If I see the banks, algorithms, and institutions buying here for sure, I'm going to fucking buy here, okay? And that's how I call this bottom. I called this bottom because there was absolutely no reason to be bullish from the retail perspective. That's why I call this bottom, okay? And also some other things that I take into measure that I will not go over now. But yeah, that's why I called this bottom. Over here, I anticipated that we will come back into here, and then that would mean that we're going to go up. But once we have moved into the premium over here, I knew it for a fact that we were going to go up. Okay, I knew it for a fact, and I called it on my Twitter. You can check it on my Twitter. And yeah, anyone who's been following me for long enough knows this. So yeah. Anyways, so yeah, this is how the market moves. This is the logic you should apply whenever you're taking a trade. You always want to make sure you're on the right side of the markets. You always want to make sure you're on this side, okay? Not this fucking side, okay? This side is a side that they are too emotionally driven, right? Because if you were looking at the structure objectively, then odds are you wouldn't fucking care about this, but they do, and they move their stops. Trading in real time is hard because of emotions, but they will move their stops up to this place, and then they'll get stopped out, and then the reason they'll move their stops is because they see like a slight move down, and then they will be like, oh, okay, we're starting to go down now. Like, retail is so dumb. Retail is so dumb. But yeah, we are all retail traders at the end of the day. Just gotta try to be not try to be a retail trader, but act as if you're not one. Okay, that's yeah. So the homework you guys have is Study structure, study support and resistance, study premium discount. That is the most important fundamentals. Okay, those are the most important fundamentals. Reason being, because you have to understand the way retail thinks if you want to have a chance at succeeding in these markets. Okay, you have to study the way retail thinks, and you have to understand the way retail thinks. Because if you understand what not to do, then you understand what to do. Okay, so in this case, I understood what not to do. What not to do was to short, and now if not to short, then long. Okay, so because we came up to this point, I knew not to short. If price held down here and it did not come for all of the sells over here, then sure, it would make sense for price to continue to go down, but it didn't do that. Guess what? It went up. Also, the reason I knew it was gonna go up is because, well, I'm not gonna say this over here, but yeah, no, that's what I'm not gonna say this over here, but yeah, okay, I'm gonna call it an episode here. We're gonna learn more in episode 3. Okay, peace.